Hello guys, welcome back to my channel. In this video, we'll be talking about Tencent, one of the largest companies in the entire world and the leading company within the gaming industry. Tencent was purchased by Charlie Munger through his holdings in the Daily Journal Corporation. And in this video, I explain to you why I believe that it's such a huge opportunity and we cannot let it go. Tencent is a wonderful company, managed by a very talented management team, and has returned an incredible 38,000% since it went public in 2004. It's probably one of the most dominant companies in China, and let's not forget that China is a huge country. I believe this company is hugely undervalued and offers a great opportunity for value investors, as I will explain in the video. Before we start though, I'm gonna ask you to smash the like button and subscribe to my channel for more videos like this one. And without further ado, let's get started. Tencent was founded by Pony Ma in 1994 when he was only 24 years old, and although he initially went into the messaging business, he transitioned into the gaming industry, among other business that Tencent of course owns. Tencent's business model is quite simple really, and I'm gonna make use of Monish Bebrai's analogy in order to explain how it works. The business has basically two branches, the software product branch and the investing branch. These two branches have returned historically a 65% and 35% annually, which are insane results. No wonder why the company has done so well. Now you have to imagine two weapons. The first one being a huge cannon, a huge bazooka, as Manish says, and that's made of 50,000 really great software engineers who make products, online products, that have historically really great results, really great returns. Those returns have historically averaged a 65% annual return, which is crazy. This first weapon consumes almost all the money that the company produces. However, all the leftover money is put into the second weapon, which is a small team of investors, Warren Buffett-like investors who are investing the leftover money and compiling the money so far at a huge rate of 35%. If we look at the company's presentation, they classify the business into four different segments. The first one being the value-added services, the second the online advertising, the third the fintech and the business services, and the fourth being others. While the first one and the third one account for 86% of the revenue of the company, 54% and 32% respectively, online advertising and other only account for 14% of the revenue, but those are relatively new businesses and are growing really fast. The company is really a king of the software industry. They are producing a lot of products, online products, that of course have really high margins. And with the leftover money, it's utilized somewhere else and it's producing really high returns. They also give more information about the segments and define some of the sub-segments. It's worth mentioning that those services are top 1 or 2 in China, making it very hard to compete against Tencent in any of the businesses they own really. I won't cover all of them because there are so many. However, we cannot talk about Tencent without mentioning WeChat, which is the leading product. WeChat is by far the most successful social media platform in China. WeChat is basically the Chinese WhatsApp, and it's the fourth most used social media platform in the entire world, with over 1.2 billion people. The great thing about WeChat is that they could start monetizing the app whenever they want, really. Imagine you have 1.2 billion people using an app, and you can start either charging money or developing products over there or even advertising something there, and that is a huge advantage that is yet to be utilized. Within the gaming space, they own 40% of Epic Games, which are the owners of the most played games like League of Legends, Fortnite or Valorant. So Tencent is basically one of the leaders in the entire world within the gaming industry. Another thing that is important to mention here is that Charlie Munger, one of the best investors of all time, recently bought shares of Tencent. Charlie Munger is a super investor who's been Berkshire Hathaway vice chairman for the last 50 years. Between 1962 and 1975, his investment partnership returned a staggering 19.8% per annum, compared to the only 5% that Dow returned over the same period. So we can all agree that Charlie Munger knows how to invest properly. And you might be wondering, why is it important that Charlie Munger bought shares of Tencent? Well, and the answer is quite simple really. Since he's a very brilliant investor, we should all learn from him and at least look into what he's doing with his money. So now we know that it's a great company and it's owned by one of the best investors in the world. So how much should we pay for that company? So let's look into the valuation of Tencent. If we run a discounted cash flow analysis on Tencent, we'll get these results. And I'm showing the results in American dollars. And you can find that on the over-the-counter market. In fairness, Charlie Munger bought those shares in the Hong Kong Stock Exchange. But for those of you who are worried about the currency fluctuations, you could always find the same product in the over-the-counter market and you could buy those shares in American dollars. So now let's look at the assumptions we've taken in order to create our discounted cash flow model. Tencent's 10-year average free cash flow growth is almost 25%, but we assumed that the business will grow at a 15% annually for the first 5 years and at 10% annually for the 5 to 10 years. We've used a discount rate of 15% because 10% is not enough for us. It's what the S&P returns on average. So let's say with a 15%. The terminal multiple, it's 15, which is rather low for such a quality business. Remember that similar companies trade at multiples of 25 or even 30. So let us stay conservative. The free cash flow for the last 12 months has been $22.5 billion. And the net debt is only $4 billion, which means a net cash of -4. The number of shares outstanding is 9.5 billion. And if we apply those assumptions to our model, it gives us a fair value for a 15% return annually of $44 per share, compared to the current value of $37 per share. It means that Tencent is at least 15% undervalued under these conditions. As you can see, this seems like a typical Warren Buffett and Charlie Munger value play, because it's a great business at a very reasonable price. However, there's a small trick that's going to allow you to purchase shares of Tencent at a higher discount. We can purchase shares of Tencent even cheaper through Proces, which is a holding company from Netherlands. Proces is a company created by Naspers, the biggest company in South Africa, which invested in Tencent more than 20 years ago and currently owns around 25% of the company. Since Tencent's current market cap is around $347 billion, a 26% of that, which is what Proces owns, is around 90 billion. So in the end, Proces owns a stake in Tencent that is at least worth 90 billion US dollars. And the opportunity over there is quite straightforward. The company owns shares of Tencent that are worth around 90 billion US dollars. And the entire market cap of Proces is currently 73 billion US dollars. So we would be buying something that is worth at least 90 for 73. If we look at Proces' net asset value breakdown, we'll see that the net asset value is around 43 euros per share, and the current price is 26 euros per share. This basically means that Proces, based on the net asset value, is undervalued 65%. Now let's make a small summary of what we've seen so far. Number 1, we've seen that Tencent is a great business. Number 2, we've seen that it's trading at a very reasonable price. Number 3, we've seen that a great investor such as Charlie Munger also owns Tencent. And number 4, we've seen that we could get our hands into Tencent through Proces, which is trading at a huge discount, based at least on their net asset value. It's also worth mentioning that other great investors such Manish Pabrai, Guy Spear or Rob Vinal also have bought shares of Tencent. So it's not a obscure company, it's a very well-known company that is in the portfolio of many great investors. But of course, this is not financial advice, and you must do your own research before buying Tencent. Well guys, that was the video, hopefully you liked it, and if you find some value in the video, I'm gonna ask you to smash the like button and to subscribe to my channel. See you on the next one.